So there we go. We received a bank statement, right, from the Main Bank of Nevada.
Mhm.
Okay, and what does it tell us here?
The charge and the overdraft that we have and the check that there are no.
So remember, we had the $10,000 overdraft protection plan, right?
Uh-huh.
But in this case, right, with that though, right, we end up overdrafting the bank account quite some time, right? We went over about $4,000 here, $2,000 here. So in this case, that's what the bank has recognized to us, that we ended up on the 23rd and 24th that we overdrafted. Okay, so they charged us 22%. Right, so that in case is going to be 1130. Okay, 11830. Excuse me. Okay, because the bank is doing work for us, right? They charge us $50 for a convenience charge, and of course, we have NSF for $100. Okay. Now, in this case, on our books, do we know that we have this? Do we have to update our checking account, don't we?
We do have.
Yes, because in this case, right, when the bank charges us money, do they let us know?
No.
No, they don't. They won't let you know until you find out, till you open up your statement and find out, right? So in this case, they take the money immediately out from your checking account. So in that case, right, what kind of expense account are we going to be utilizing to reflect these statement charges?
Bank fees.
We're going to use bank fees. Okay, account number
It is 6,100.
6,100. Okay, 6,100. Okay, and then it's going to come right out from our checking account.
The checking.
Yep. Right? We don't need to write a check because they automatically took it out from our checking account without letting us know, right? They already took it out from our current balance.
From the bank. Yep.
So in this case, how much in grand total is going to be my total bank fees?
So we have a 50 plus 180.30 plus $100. So we have 268 and 30 cents.
Okay, so 268 and 30 cents. Okay.
268 and 30.
Okay.
So this is statement, bank statement or adjustment?
Main bank, right? They're the one who sent us this bank statement, or we printed it out from the website. Okay. So main bank, right? This is, what do you call this? A bank reconciliation.
Bank reconciliation statement charge. Yep.
Okay. All right. So this one is not a real bank reconciliation, obviously, but this is the point that we need to look at is what's the difference between the bank and what's the difference between the cash ledger. In this case, we don't know that the bank charged us this until now. Okay. So, what do we need to do here?
To go to the ledger.
We need to go to the ledger.
High bank fees.
So you could say $50 service charge.
And overdraft.
118.30 overdraft interest.
And NSF
Mm-hmm.
We have $100.
Okay.
Mm-hmm. Yes.
General journal number 22 still.
22. Still 22.
Mm-hmm. For a total of
Of
268.30.
268.30.
Okay. Okay. So
Checking.
we got to go to checking.
Have bank reconciliation
You could do that, or you could make bank service charges
and service charge.
for $268.30. So how much cash do we actually have now?
13,425.38.
Okay,
38. Yep.
good.
That's all for that, no?
Mm-hmm.
No. Yes.
Now, yes, you can go to your subsidiary ledger and update your main bank account because they charged you that. But again, they already charged you, so there's no real point to like really update that, just because, unless you want to keep track of it, saying, well, why did I make these payments, etc., etc. Because in this case, right, they never billed you, right? It's something that you acquired on your own.
Mm-hmm.
So let me see.
Bank of Nevada there.
Yeah, Main Bank of Nevada. So again, right, you can put in that you have the overdraft protection plan, right? So in this case, right, you could put in the date here saying this is what you paid, right? For this one right here. Okay.
Yeah. The 30th
Right? Invoice, there's no invoice number. So what is the journal 22?
22.
No terms because this is your bank. Okay. But here you could say that the invoice amount, right? You got charged a total of $268.30 for all the fees, right? The fees are outlined right here. Okay. You can even include right here that you have the 22% interest, right?
Charge.
You could do $50 service charge.
And the NSF checks.
Mm-hmm. And $25 per NSF check.
No, $100. $100. 100 for the NSF.
Okay, there you go. And of course, you got 200, and then of course, it already came out of your checking account, so you don't technically owe anything because they already took it out. So in this case,
charge, we have 100. We have $50, no? 180. I don't know. What did you write? Interest $50 and service charge. The service charge there are $50.
yep, I put $50 service charge.
And the
right?
25 there is what?
25 per NSF check. We wrote 4, so that's why it's a total of $100.
Oh, for each one. Oh, okay.
Yeah. Okay. And we already understand that it's 22% for any overdraft protection, so yes. Okay. All right.
Oh, we write 00. That well, we pay. Yeah.
Well, we didn't pay. They took it
yeah.
out of our checking account automatically.
They automatically.
Okay. So then let's see what we have here. Printed from credit card statement for June Forum National Bank Visa credit card. Okay.
That's interest.
So here is interest, right? What kind of interest are we looking at?
We have the interest that you use the credit card, no?
Correct, right? We have to, right here, I put in italicize that because we don't have an interest expense account, you're going to put this as a bank service charge or a bank fee. Okay, so in this case, right, the interest right here is going to be collected under the bank services or bank fees, right?
We
Now,
don't
in
have
this case, go ahead.
with the interest payable. No,
Interest payable because are we paying it now?
no.
Exactly, right? This we're just recording a bill.
Okay. So that's like what? Like a bit bad, you know.
Go ahead. What was that?
What account you gonna we gonna use for that one?
What do you mean? Which account? Which one? Which one are you referring to?
Oh no, but for the on June overdraft of 4,251 by
4,251. Where am I? Where are you looking at?
211. Sorry, no 50. 4,211. Where are you? On the top. On June 23rd. On June 20. Here we go.
You're talking about this
Overdraft.
section here?
Yeah.
This is to explain why you got charged 118 and $30.
I didn't
Yeah,
understand.
that's
Oh,
22% right there. Or
okay.
22 divided by the total amount of months, which is 12, right? And that's the total
That's the total of the.
mhm. I just put that down there so you know where these numbers come from.
Mhm.
Okay. And then right here it tells you $25 per every NSF check that you
every
wrote.
check.
And in this case, we wrote a 4, right? We wrote for 1517, 1523, 1524, 1525.
Now I understand.
Okay. Okay. So that's just extra information. Okay.
Mhm. Yep.
So now we're on the main bank Visa credit card. Mhm.
So that's National Visa Gold Credit Card Statement Bank. So we have on the 30th balance payment. So we have to pay the interest, no? Or they took it out from the. By the way, they took it out yet from the bank, no?
Well, in this case, this is not the same bank, right? This is National Bank
National
Visa.
Bank Visa.
Okay. They are just purely a credit card company.
Okay.
Okay. Now, in this case, right, what is the total amount of balance that we have due on the credit card? Let's take a look.
1885.89 plus the interest, but we have a 1,914.18.
Okay, let's take a look. So we have a total 18.
1885. Yep.
Okay, because good. So we do know that it's true, right? The bank statement is reflecting true. Now, in this case, what do we do with the interest expense? Because now my total bill I owe is $19.14 and 18 cents. What do I do with that? Okay, so in this case, I'm just recording the bill. I'm not paying for it just yet. All I'm doing is right here, I printed out the check statement as of June, okay, from the National Bank Visa, right? When is this bill due?
The 10th.
It's due on the 10th of July. So in this case, I'm going to pay on the 10th of July. Right here, I gave you a note here that for this transaction, right, you need to assume because we don't have interest expense that we're going to record the interest as a bank fee.
Bank fee. Okay.
Okay.
Receive the bank track loan. Okay, I jumped. So like a bank fee, we're gonna record that.
So that's the interest.
That's the interest, bank fee.
Okay. How much do I owe?
1,885.89.
Okay, so in this case, right, I'm recording a bill. So am I making a payment to the credit card?
No.
No.
Not yet.
Not yet. So what do I have to do with this 1885.89? Okay, you have two options. You either record the bill or you just record when you make a payment to this bill. Okay? So in this case, I want to record that I received a bill.
For the full bill or just the interest that you have to pay?
Both, because I have to pay for this entire credit card, right?
Yeah. But you have a minimum to pay $50 from this amount.
Okay, so in this case, right, I'm going to assume, right, if you look down below, it should say assume that you're going to make a payment for the entire transaction. So due date, use the interest payable to record the interest expense, and assume you will pay off the entire balance on the credit card on the due date. So how much am I going to actually pay on the due date?
So 1,914.18.
Correct. But in this case, right, I'm not paying it now. I'm paying it later.
Later.
So I received a bill. So how do I understand this?
Account payable.
Accounts payable. Good. What else?
And you're gonna use interest payable.
Yes, interest payable.
And you say that we use the bank fee, so bank fee.
In this case, wait, hold on. Accounts payable are not debited; they're credited. So in this case, accounts payable and interest payable. Okay. And you said bank fees? Yes, I will use bank fees to record my interest.
Interest.
Okay.
Okay. Visa pay.
Visa payable, right? In this case, I have to zero out my Visa payable because I'm converting it into an actual bill, right? So Visa payable. Correct. Okay, so 22,000 here. Bank fees is 6,100. Accounts payable is 20,000. And interest payable is going to be
28.29.
28.
Oh no, sorry, I was said to amount. 27,500.
Okay.
28.29 is the amount.
Okay, so 28.29 is the interest, right?
Yeah.
How much is the Visa payable?
1,885.
And 89 cents.
89 cents. Yeah.
Okay.
Yes. 28, 20, 29. And account payable 18. Yep, that's all.
So my description here is
Payment. Click on. National Bank.
I think it's 18% interest, right? 18%? Yeah, 18% interest.
And 18, yep.
Okay, any invoice number on here or anything like that? Nothing that I see here. Okay.
Yep.
And it is due on, okay, so there you go.
July.
Okay.
July 10th.
Okay. So let's go ahead and journalize this. Or I mean, record it on the ledger. Okay. Starting out with our liabilities, right? We're going to zero out the Visa payable account because we're recording a bill. Okay.
Yep.
So in this case,
We have state. I don't know. A statement of the visa happen. Bill statement. 22. 1,885 and 89 cents and 0.
right, it's going to bring my account balance to 0, right? What's next?
We have the bank fee. So bank fee interest 18% on the visa.
Visa credit card, 18% interest for 28.29.
296.59.
Okay.
And then we have account payable. Oops, the same amount. No,
No, because when we
no, it
we're
is.
yeah, right? What we owe on the credit card, it's separate from what we have to pay
Separate from
interest
that.
from. So again, Visa credit card bill statement 22 for the 1,885.89.
Okay, 5,000. I don't know who's knocking on the door. Can give me 1 second? Someone knocking on the door.
Sure.
Second.
We have interest payable next.
Mm-hmm.
Then you can put the same information. So Visa.
With in, statement interest 18%. So we have 28.29.
Okay.
That's all.
Mhm.
For this.
Last but not least, right? We need to
The
update
subsidiary ledger.
because we have
The
a
bank,
bill.
Yep.
Okay. So in this case, we are looking at National Bank Visa credit card.
The same bank, the same one.
Nope, this is different. Remember, National Bank
No,
is
this
one,
the
and the other one is Main Bank of Nevada. Okay. So you could choose to use this one if you want to, because there's no information in here except we know that it's due on the 10th. Okay.
Oh, wait, the total.
So again, if not, you can use the second line if you'd want to. In this case, I'm going to go ahead and
the 30th.
invoice. No invoice because we printed out the statement. General Journal 22. Terms. If today's the 30th, right, and it's due on the 10th, how many days? So net 10.
Net 10.
Okay, which then gives you July 10. Okay. Your total amount.
It is 1,914 and 18.
Okay. So make sure you put in here, right? 22% interest, right? So you could say balance was 18,589 plus $28.29 interest.
Yes, 18%. And
Okay, we already wrote that it's going to be 18%.
yeah.
Okay.
So we have to pay account payable 19, 14, 18.
Oops. Okay.
Mm-hmm. That's all for this.
Mm-hmm.
Now we receive a bill from the truck.
Okay.
Okay, how much the bill? Which bill? So we have payment or something. I don't know what we have on the.
So in this case, right, let's take a look at this received bill from the main bank, right? That's where we got the truck loan from. Was from the main bank of Nevada. Let's take a look. Okay. In this case, I have 36 payments left,
Payments.
right? And I have to pay $849.81. Now, what does that include?
The interest and the payment.
Now, in this case, right, the minimum payment is $849.81. That means no matter where you are in a loan, you either have to make the payment of the minimum or you can pay more. In this case, right, this is a lot of money. So we're going to make a payment of $849.81 on the due date. Okay. Now, in this case, the 3% interest is $73.05.
Yes.
So what do I do with this interest right here?
Is a fee, no? Huh? What does it mean that what you're doing?
Okay, so in this case, this one's it's slightly different. Okay, so when it be on the new page 23 right here, it's slightly different. How do we recognize this? Okay. In this case, right, we received a bill.
Yes. Okay. There's still interest that you have to pay, no?
Yes.
We have the account track loan.
Okay, go. We have the account truck loan.
Okay. We have the loan too. That is that's the account where we put the. We have the truck. We have the truck loan.
Okay, so in this case, the asset is not going to be affected because we're just making a payment, right? Or in this case, we're recording a bill.
All right.
Okay.
The only stuff that is going to be affected is your checking account.
Well, in this case, we're not making a payment. We're going to pay.
And we just have the bill.
Yes.
Okay, so let's see. No, purchase expenses, supplies, no, license cost. Is no bank fee or is a loan fee?
No. There's no loan fee. So in this case, you're correct here. You are going to separate the interest because that's not what you owe on. That's not what you actually really owe, right? This is interest that you're going to collect. So bank fees is going to be correct. Okay. Now I'm recording a bill.
Account payable.
Accounts payable.
And interest payable, okay?
If you want to separate the interest apart from what you actually truly owe, then that would be interest payable. Okay. Now, of course, if you don't want to keep track of that, right, and just say that I'm just going to make a payment for all of it, then because you already made a payment to the expense as is already, then you could
Mhm.
just associate just that account's payable account. Okay, but in this case,
Make all the
I'm gonna go ahead and
okay.
separate it because I want to know how much interest I've paid into, whether it's a truck loan, a bank loan, whether it's a credit card bill, okay, or whether it's even overdrafting, right? That's interest, right?
Mm-hmm.
Okay.
You write track loan account payable, and that's all. If you receive the bill,
We have to pay for the interest too.
I know, but you can put the full amount of inside when you get like you when you receive you cannot put track loan for the full amount 849.81 and
No, because
account
this
payable for
payment right here of 841.81 includes
mm-hmm.
interest, right? What's the
Yes,
rule when you make a payment for a truck loan or any kind of loan?
the interests that are separate.
You
The
always
payment is
pay for
separate.
interest first.
Uh-huh.
Number one rule. You pay off the interest first and everything else goes towards the actual principal.
All right.
Okay, so in this case,
Mm-hmm.
right, you have the choice whether you want to just assume that all of it's going to be in accounts payable, or you can separate your interest so you know how much interest you're actually going to pay.
Mm-hmm.
So you do have a choice here.
Okay, I got
Okay,
it.
so in
Mm-hmm.
this case, how much interest am I actually going to pay? Wait, let's go ahead and do account numbers first. So truck loan,
The track loan is going to be
28,
29, no?
29,000.
29, 20, 221 and 90 cents. That's all the loan.
The account.
Oh, the account. Track loan, it is 28, 20.
Okay,
28,
and
20. Yep.
then we got bank fees for 6,100,
Mm-hmm.
accounts payable for 20,000, and interest
Interest payable.
payable was 27,500.
Mm-hmm.
Okay, so in this
Yep.
case, how
Okay.
much was my interest that I'm paying?
73 and 5 cents.
Okay, how much of the money is actually going towards the principal?
776 and 76 cents.
Right, so you take your full amount of what you're going to pay and you're going to subtract out the interest. So you're actually only paying $776.76 to the actual principal.
Mm-hmm.
Okay. So once again, that means you're going to owe this much amount, and this is how much
Yes, and
interest you're
this
going
is
to
what the
owe.
interest.
Okay.
Give me 1 second. Okay, that's all. I'm back.
Okay, no worries. Okay, so
Yes, I'm
let's
back.
take a look. Okay, any information on this statement here?
That's okay. Record the bill. Assume that the bill balance is reduced to interest rates. That's transaction. That's all. We have to do the ledger.
Mm-hmm.
Oh, the information of this. So, um, statement bank.
Uh-huh. Truck loan uh, statement. Okay.
Mm-hmm.
3% interest.
Interest.
Okay. So let's go ahead and plug this into our loan.
Yep.
I mean, to our ledger.
Ledger.
Okay, so truck loan is under liabilities. Okay, here we are under truck loan.
Mm-hmm.
It is the 30th. Statement.
Bank 31.9 minus 776.76. Okay. We have a 28,448 and 14 cents. 284494.
Okay.
Oh, oh, I get it. 224. I put it.
What happened?
No. I make a mistake on the. I didn't understand why it was 2045, but I know what I did.
Okay.
24, not 21. And we have the interest,
Mm-hmm.
bank fee, 59 plus 73.05. So we have a 73 and 5 cent. Remaining is 369 and 64.
Okay.
Yep.
Liabilities. So we have accounts
Account
payable.
payable. Just growing. 5, 10 plus 7, 6, 1, 7, 6. We have a 6,547.86.
Okay. And last but not least, you got to do interest payable.
Mm-hmm. Nope. The business loan. I don't know why.
Oh, you are right. It's supposed to be the one above it up here. Okay, thank you.
There we go.
So let me copy all this information here then.
You didn't write anything. Business loan. Oh, that from before.
Yeah.
No. 29. Yes, from before. The
I
mistakes.
put it in the wrong
I
one.
remember
It's
this
supposed to be
before.
in the interest payable.
Mm-hmm.
Okay. So I'm going to clear this out right here.
Before I didn't pay attention.
Yeah, me neither. That was my fault. Okay. So then let's see. So here truck
Um,
loan
interest.
3% interest. General 23 for 7305.
We have 5. Yep. And we have a 101 and 34%.
Good. All right.
So, and now we have the subsidiary letter.
Yeah, we have to update our subject letter because we received a bill. So in this case, it's for main bank right here. Okay.
Mm-hmm. Yes.
Oops. Wrong one. Main bank right here, right?
There
We
we go.
have the truck loan, 3 years, 3% interest APR, right? You could put in the number here, but once again, I'm going to go ahead and create a separate one. Okay?
Yep.
Because in this case, right?
We have the
I just need to just only
payment.
include, we're not doing a
Payment.
payment. We're just
No,
going to record the 3%
the
interest.
Oh, just the 3%, not the payment. The 776.
Well, we didn't pay. Did we pay yet?
No.
No,
But we
we
can put
don't.
it that
But
we
you
didn't
do
pay.
need to enter in that interest.
Mm-hmm.
Okay. So I said again, so this is June interest, right? 3% interest.
3%. Oh, I got it.
Because right now the bill says that I owe 29,221.90, but that's not true, right? Because I got charged interest. So in this
What
case,
happened?
this one is going to tell me because the difference between this one and the last one was that we didn't have an account balance yet. We had to enter in the account balance.
Yes.
right? Because on a credit card, right, it's based on how much you charge. In this case, we already have the amount that we owe. Make sense? So it's a little different. So in this case, I need to add in my interest so that when I make my payment, it will reflect on our bill.
On the
Okay?
bill.
Mm-hmm. So again, interest, again, was on the 23rd.
On the 25th.
How much was the interest for? $73.05.
73 days. We don't have to write the 10, 20, net 20.
You can. So again, terms is going to be net 20.
Mm-hmm. Discount.
So then that means it will be due in the 20th of July.
20.
Okay.
Mm-hmm. And you have to pay the payment. You have payment.
No payment because we didn't make a payment yet.
No, the 73 that we have to.
No, that's going to be under, it's not a
Account payable.
payment where we didn't make a
No,
payment
it's
to
not.
it.
No.
We didn't pay yet,
Interest, I know.
but we have to include the interest because now it tells me that I owe $29,294.95. And is that what my bill says?
It is supposed to be.
We'll take a look at the
because
bill.
That would be
Is that what the bill
29,
says?
290. Oh, yes, that's what it says.
That's what I owe, right? Because I haven't made a payment yet.
Wow.
Okay, that's what my bill says. Because if I don't make a
Yes.
payment, then I have to rack on more interest.
Mm-hmm.
So that's how you have to do this one. Okay. The previous one, we didn't have an account balance yet for my credit card.
Yeah.
Mm-hmm.
For the credit card. Yes, that we have the balance. We didn't start to pay, but we received the loan.
Correct. Okay. And that is it for today. Any
So
questions?
we finished? Nope. Yeah, I have to over do all of this.